where stocks are today and whether you want to go in and buy. Should you be more inclined to buy a house? So we got more data out today that shows housing is looking the best it's been since 2009. We've seen mortgage applications on a tear. We've seen a lot of people get off the fence in the face of these rising interest rates. So today, leading things off, we're going to look at housing. We're going to look at whether now could be the time to arrest the naysayers and just say maybe this housing turnaround is real. Dagan McDowell's been following this very, very closely. Dagan, what can you report?
Neil, home sales, HOT, on fire last month. Sales of previously owned homes, as you pointed out, running at the fastest pace since November 2009, up 5.1% from the month of April, running at a seasonally adjusted rate that came in above expectations. And this despite the recent move up in mortgage rates, which started climbing earlier this year. Last week, the rate on a 30-year fixed rate mortgage averaged about 4%, but maybe that move up is getting buyers to move off of the sidelines, go out there and buy in anticipation of even higher mortgage rates down the road. Also, the improving job market is helping and certainly fueling optimism. The fact that home prices have been coming back. From 1 year ago in May, home prices are up nearly 8% and $228,700. That is your median home price in this country for a previously owned home. That is just $1,700 shy of the peak hit back, can you believe it, July 2006. So this downturn's been going on almost 9 years. And then you've got home builders. Take a look at the stocks, how the stocks are responding to this good news today. You've got some of them up, and also your home building applications for home construction in May, running at the fastest pace in nearly 8 years. So the home builders see better days ahead as well. Neil?
Thank you, Dagan, very, very much. And we were picking apart this report as Dagan was, and a couple of things that we found of interest here. This idea that it was a broad breadth report. In other words, every region was up and up smartly, particularly the Northeast that saw better than 11% uptick in sales. Every other region of the country was up at least 4%. You don't often see that, but again, you know, these numbers come in fits and starts. You have new home sales data. You have the existing home sales, which is very, very strong. Mortgage applications, which were running at a better than 8% clip in the latest period. Home builder confidence, which is at close to a 7-year high. So how to dissect all of this and whether you should be inclined to take advantage of this. Housing pros, Kendra, Todd, David Licken, on what they're doing right now. Kendra, of course, you're looking at this and you're saying what? This is real, or give it some time?
Well, no, this is real. You know, we've been talking about whether or not interest rates were going to really start to go up for the last 2 years, and from the Fed's dialogue, it seems like, you know, that's the direction they're going to take. But as long as the rate increases are done slowly and they're done incrementally, I don't think that we're going to see any type of negative response or impact on the housing market. As you just mentioned, all the numbers look favorable. And I think over the short term, it was expected to be a hot summer. I think it's going to be an even hotter summer as buyers start to get into the market so that they make sure they buy before rates go up even further.
You know, David, you always hear about these millions of others who can't participate at the rally because they're still underwater. Those who own homes whose mortgages are more pricey than the underlying real estate, so that they can't move. How much of a factor are they, you think?
There is a factor there. The fact that the rising tides are helping those people be freed up to move on and buy homes, I think that's a contributing factor. What's also significant about these latest numbers is that we are seeing an increase in the first-time home buyers, a 2% increase over the previous month, but it's still far below the 40% average that we have seen. We need that first-time home buyer to keep this as a sustainable growth on these numbers. It's great news. These numbers are real, but is this a trend, or is this the high water mark as it relates to these sales? That's what we have yet to determine.
You know, Kendra, we're grateful for so little these days when it comes to housing that if we are off the mat, we tend to think we're off to the races. Where are we really in your idea?
Well, I think obviously it's going to differ region by region, but I'll tell you this, Neil, more buyers coming into the market is really not the solution for a lot of the major cities in this country. It's not just cities like Seattle and San Francisco that have experienced an uptick. You now have cities like Dallas and Denver that have now officially surpassed the high watermark from the real estate boom as far as pricing is concerned. I think we do need to really pay careful attention to the buyers in that 100 to $250,000 range. They account for nearly 50% of all home purchases. And if rates continue to go up, they will lose buying power and effectively be priced out of certain markets.
All right. Now, one of the things you always hear looking at this market, David, is that a lot of people still can't get a mortgage, or the appraisals are still tough to come in at what you hope they would come in. And so a lot of those problems, vestiges, I guess, of the housing meltdown remain. Is that so?
Well, we are seeing some improvement, less problems with appraisals as we continue to see good appreciation in the homes. These interest rates are qualifying for these loans and within the current credit box. And I've said on this program numerous times with you that the credit box is actually plenty good. It's the regulatory environment that we're in that's been more of the inhibitor of lenders wanting to get out and lend on the fringe of the current box than anything else. But look at this deal. Every time an interest rate goes up 1/4%, assuming an average loan amount of $175,000, every time a 1/4% increase, it requires $100 more per month income to qualify for that. And so as we see interest rates, and all interest rate projections say that they're going to be going up to 5% by the year end, that means that we're going to have to see someone making a substantial amount more money. The question is that are we going to see those kind of income increases to stay pace with the interest rates going up? And I think that is another factor that could inhibit this mark and possibly cause this to be close to a high water mark for these numbers.
All right, guys, well, we shall see. It's still early, but again, some hopeful news on housing. Again, if you just tuned in here, a surprising jump in existing home sales running at a pace